Hello and welcome to Take on Tech. We have an interesting show for you today because we'll be featuring a young startup, 2 years old in the fintech sector. He has mastered his niche and is now helping young startups and gig workers to manage their finances in an easy way. We'll be telling you about that later on, but first we have the tech news. So you are rightly tuned in. This is Tech on Tech and my name is Stephanie Ayeta. In our tech news segment, Alan Naoko reports on agrivoltaics, which represents a promising approach to addressing the challenges of food security and renewable energy production in a sustainable and integrated manner. AVE News, a fintech platform that focuses on providing financial services tailored to the agricultural sector. And lastly, a look at platforms that are helping modernize SACCO operations in Kenya, making financial services more accessible, efficient, and transparent for members.
Under a radiantly scorching sun and clear skies punctuated only by distant wisps of clouds, we find Anne Watkins tending to her farm. She is one of the many Kenyans celebrating a new revolution in agri-based technology.
This is a new technology which saves on so much, and with the climate change, and especially with the solar production, I think with the solar it's free. We have to maximize to save again on climate change and basically to save on costs, especially in those arid and semi-arid areas.
The agrivoltaic system has thus far been used successfully in the United States and Germany, but Kenya and Africa are only just experiencing the project for the very first time. Several months of research by scientists from the University of Sheffield in the United Kingdom, World Agroforestry and Kajiado-based Latia Agro-Entrepreneurship Institute has yielded positive results for the project, now dubbed Harvesting the Sun Twice.
We had two plots. We have the control plot that is grown under the normal conditions. And what we were able to know is that after the analysis, we were able to get that the crops that were grown under the panels performed better. That is in terms of the quantity and the quality.
Agrivoltaic technology combines land dedicated to solar panels with land dedicated to agriculture to improve food security and create connectivity.
Over the last 15 years, over the last 20 to 30 years, all the players that have been in the agriculture ecosystem, we have put the foundations for why agribusiness is viable for the continent. Most of the technologies that we are talking about, we know which technologies have a chance of success on the continent. What really now needs to be done is to connect the dots.
However, after the successful rollout in Kenya, another trial is being set up in neighboring Tanzania, the aim being to spread the technology across the continent. But farmers like Watkins say they still need help.
Being a capital-intensive project, the government maybe can put up policies in place when it comes to funding, maybe providing cheaper loans to farmers, and maybe organizing farmers into cooperatives, which may end up being a community project as a cooperative.
Even as the continent and the world gathers in Nairobi from the 4th to the 6th of September at the very first ever Africa Climate Summit to deliberate on the adaptation of climate change mitigation efforts, climate-smart technologies like agrivoltaics remain a source of hope to rural farmers in the face of a changing and challenging climate.
The main thing here was to give them a solution which can give them that real-time information. So we created this super hub to assist the agribusinesses so that they can record their transactions. We can get digital invoices, and the digital invoices in this case, you don't have your client or your customer doesn't have to be having the hub so that they can get the invoices. No, most of the time when we visited our clients, we realized with time that most of these clients, they don't keep proper bookkeeping. After training them, after finding the importance of the app, they're starting to use our application.
This is the homepage where you'll be required to log in after you've created your credentials. So once you've logged in, this is your homepage where you see the finance module, the team management that is under the operations, trade, network, and then the personal. So I'll be taking you through the finance. Finance is where you apply for financing. You'll see the loans that are available that you have already applied for and the ones that you have paid for. So if it's overdue, you are able to see that this is the balance. Aside from that, you'll be able to see your transactions. So this is your historical transactions that you can be able to export. Next, we have the team where you manage your business team. Task management, where you have assigned the team members their tasks, their roles, as you can see there. Next, we have the time clock. This is just to manage the shifts. So for example, if you're dealing with an exporter where they are coming in shifts, for example, you'll be able to schedule them from this interface. Next, we have the chat module, where it encourages communication within the team that is not outside of the system in the organization. After that, we have the trade module where you are able to see the purchases, the sales, and the products that you're selling. So under products, you are able to create a product catalog, and you'll be able to list all the products and manage your stock. Next, you'll be able to see the sales, and you can be able to see the sales per day and per month, so to make the projections. Next, we have the purchases. These are the purchases that you have made, incoming stock. After the trade, we have the network. This is your network of your suppliers and your clients, where you have it's like a call contacts list. So you have them there, and you can be able to assign them their roles. Lastly, we have the other aspect, where is personal. We call it the wallet. This is the money wallet, where you manage the business funds. Either it can be the money you have put in, or it can be the funds that we have financed you after you have applied for your loan. So through the personal wallet, you can be able to log in and make payments. And the beauty about this is we have put user levels, so you can be able to restrict who is able to access which module based on their roles. And then under M-Pesa Insights, this is just to be able for you, if you have a pay bill, for example, to import your M-Pesa pay bill statement and to get insights from it. So in a nutshell, this is the Avenues application, and we have more features coming in. Every month we have new modules coming out based on the learnings we have made in the market.
The Cooperative Alliance of Kenya says its 800 million shillings tech platform will secure member savings and minimize cases of fraud in credit cooperative.
Tech is aimed at uplifting our cooperative movement in terms of their financial operations, efficiencies, and security to a higher level.
The Cooperative Alliance of Kenya says the platform is a precursor to the rollout of the Central Liquidity Facility.
This platform will be an enabler of cooperatives to collaborate together so that we can have a shared services to enable cooperatives and SACCOs to borrow from each other.
The SACCO interlending is expected to drastically reduce costs incurred by SACCOs to recapitalize to address short-term needs such as overnight lending.
Instead of each society or a SACCO spending 300 million to buy a similar system, collectively now we are saying that money can be given as loans to their members by using this platform.
The government is contemplating capping of inter-SACCO platform system sharing at 30 SACCOs in a raft of measures aimed at regulating inter-SACCO lending.
Be setting a reasonable number of SACCOs that one platform will be allowed to now provide service.
Fintech startups in Kenya have experienced significant growth in recent years, driven by several factors. Kenya is renowned for its early and widespread adoption of mobile money, which have revolutionized financial transactions, providing a platform for many fintech innovations. The Central Bank of Kenya has been supportive of fintech innovations, implementing regulations that foster a conducive environment for fintech growth. Initiatives such as Regulatory Sandbox allows startups to test new products in a controlled environment. Kenya has attracted significant investment from both local and international investors. Venture capital, private equity, and grants from development agencies have been crucial in fueling the growth of fintech startups. The proliferation of smartphones and internet connectivity has been instrumental in the growth of fintech. As more Kenyans gain access to these technologies, the potential user base for fintech products continues to expand. Kenyan fintech startups are developing a wide range of solutions addressing various financial needs, including payment solutions, where startups are creating platforms for online payment, bill payments, and peer-to-peer transfers. Lending platforms, in which fintech companies are using data analytics to offer microloans and credit scoring solutions to individuals and small businesses. Insurance, or InsurTech, is another area where innovative insurance products tailored for the local market, including agricultural insurance and health coverage, are gaining traction. And lastly, wealth management, where startups are providing platforms for savings, investment, and personal finance management. There is a high demand for financial services among the unbanked and underbanked population in Kenya. Fintech startups are leveraging this demand by offering more accessible, affordable, and user-friendly financial solutions. Collaborations between fintech startups and traditional financial institutions, telecom companies, and other sectors have been beneficial. These partnerships help in expanding reach and leveraging existing infrastructures. While the growth trajectory is positive, Kenyan fintech startups face challenges such as cybersecurity threats, regulatory uncertainties, and competition from global players. However, the sector is expected to continue growing, driven by ongoing innovation, increasing digital adoption, and supportive government policies.
For years, the norm for a job has been permanent full or part-time employment. But recently, more and more people are beginning to take on a variety of short-term jobs, also known as gigs. These include things like freelancing, temp jobs, jobs in the sharing economy, and more. All of these different jobs form something called the gig economy. The gig economy is beginning to take up a larger portion of the workforce, and studies show no sign of it slowing down. This is partially due to the evolution of technology. Companies are now able to hire workers anywhere in the world who can then easily telecommute and work remotely for them. Mobile apps have allowed businesses like Uber and Airbnb to grow an enormous amount of contract workers. And social media has given people the ability to market themselves and sell their products and services at a much cheaper cost than traditional advertising. It's hard to say exactly how the rise of the gig economy will affect and change the future of the job market, but we do know that both companies and workers will need to continue to adapt to it.
The gig economy in Kenya is growing, with many individuals engaging in freelance work, ride-hailing services, delivery services, and other gig-based jobs. These workers often face challenges in managing irregular and varied income streams. Simplifying income tracking by consolidating payments from different sources helps gig workers keep track of their total earnings and also improve their financial literacy by empowering users to make informed financial decisions, promoting better spending habits and savings. Paid, a fintech startup, was established 2 years ago with a mission to assist gig workers in managing their finances better.
Essentially, what we're building at Paid is payments and financial management infrastructure for gig workers in Africa. So we provide them with a platform to receive payments, get paid, and make their money work for them. So right from how do they track their income, how do they track their spending, and how do they save, budget, and just generally grow their money.
The startup exemplifies the innovative spirit of Kenya's fintech sector, addressing specific needs within the growing gig economy.
So primarily, Paid is more than just payments. So we're providing these gig workers and freelancers the platform to make their money work for them. Where this comes from is the fact that gig work is freelancing. Being a creative is highly, and income from that is highly unstructured. So meaning, I don't know how much I can't. If you ask a freelancer today how much they're making in a month, they can't give you an accurate figure. So where Paid comes in is we provide them with one platform to receive payments from multiple channels, aggregate their income on one place, and then through that, transaction data, income data, spending data, we're able to provide them with personalized financial assistance. So right from how do you budget, how do you manage your bills, how do you save, and how do you even grow your money.
As Paid continues to develop and expand, it has the potential to make a significant impact on the financial lives of many gig workers in Kenya.
Young people enjoy the flexibility that comes with gig work. The fact that today I can wake up at 9 a.m., do a gig for someone in the US, spend the rest of the day out, come back at 8 p.m., do a gig for someone in the UK, and make good money. So the increased adoption of tech among the young people, and the fact that gig work is very fluid and very flexible is attractive to them. But even beyond that, labor in Africa is or gig work, freelancers in Africa are relatively cheaper compared to the rest of the world. So we are seeing lots of companies, lots of individuals from outside Africa looking for talent within Africa, which what looks cheaper to them is good income for freelancers here in Africa. So that is then also accelerating the rate of gig work in Africa. So there's a huge opportunity in the gig economy, and that is why we are intentional about building financial services for that space. To get started on Paid, it's pretty simple. It takes you less than 5 minutes. Number one, you just go to mypaid.app and get started. Click on Get Started. Enter your details, that is your name, your email, and your phone number. Set a password, and you're in the app. Now, after you've gotten into the app, you just need to activate your account by verifying your phone number, and then now you'll submit your national ID and your passport photo. The purpose of this is just for compliance reasons, so that we're able to know your customer. We're able to know who's transacting on Paid. Once that's done, you're good to go. You can receive payments either by your payments page, which is available on the app, on the platform, or you can send invoices and get paid on the same invoices. So at the moment, you can receive payments via mobile, via bank, via card, and via stable coins, so directly from the US to Kenya. So we do transaction costs, so we charge an average of 1.5% transaction fee. We've made it as affordable as possible. We're also introducing a Paid Plus subscription plan, which will basically provide our users with access to additional financial management services. But at the moment, it's just the transaction cost.
Like any innovative platform, Paid faces challenges such as integrating with various platforms, ensuring user adoption, and safeguarding data security. However, the opportunities are immense. With gig economy continuing to grow, Paid has the potential to expand its user base, forge strategic partnerships, and introduce new features like automated saving plans and investment options. As Paid continues to develop and expand, it has the potential to make significant impact on the financial lives of many gig workers in Kenya. That's it on today's show. What a great startup. What's your personal take home from this episode? Talk to us. The hashtag is Tech on Tech at KBC Channel 1, and my name is Stephanie Ayeta. I will see you next week, same time, same place. Until then, bye-bye.